Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite studio in Times Square, New York City, we have Jonathan Silver, President and CEO of Affinity Solutions. It's a consumer purchase insights company. We're going to discuss consumer purchase trends and what that could potentially mean for the second half of 2023. Jonathan, it's great to have you as always. Welcome back to Trade Talks.
Thanks so much. Great to be here.
And certainly you know about consumer spend trends with your time that you had over at McKinsey. What can you tell us about where the data is derived from for Affinity Solutions?
Sure. So happy to explain a little more about our data. So our data comes from credit card and debit card transaction data from about 3,000 banks that represents over 140 million debit and credit cards, about $1.5 billion of spend every day. We get that data daily. We then anonymize it, we aggregate it, we panelize it so it's highly representative of what's happening in the economy. So we look at census data, we look to make sure it's highly correlated with that. It's highly correlated with 10Qs, 10Ks. So that's the first step. And then we slice and dice it by household income, by age, by retailer, by category, so we can get trends that are available nowhere else. And those trends, because we get the data every day, we can see that happening in almost real time.
So what are some of the key consumer purchase trends that caught your eye this month?
So this is interesting. So, here we are, after the highest inflation a year ago, I think roughly was literally the highest inflation we've seen in decades. It's come down a lot. It's 3.2% this month, the CPI report, 4.7% for core inflation. And we've seen, pretty significant increase in retail spend, 5.3% in July versus July of 22, July of 23 versus July of 22. If you unpack that, you see some interesting things. So looking at durable goods, for example, which is always a leading indicator of the economy, looking at electronics, appliances, building materials, and furniture. If you look at it, you say it's flat, roughly flat in July, roughly flat in Q2. But you compare it to Q1, it was down by double digits. So that's actually an improvement. It's a good sign. The next thing we look at is gas. So gas was down 14%, but prices were down by 3%. So it's not as bad as it sounds. And what's really interesting about gas is people judge the economy more based on gas prices, even though it only represents about 3% of their total budget, because they're constantly looking at the price of the gas when they fill up a tank every time they go to the pump. So that's interesting. We've seen in-store, non-store spend, I should say, Amazon, e-commerce, that grew 22% in July over July of 22. So that's great. We're seeing that. Interestingly, baby boomers were probably the most significant contributor to that growth. You would expect that sometimes coming more from younger populations. And then the thing that we really look at a lot is income level. So if you look at low income, surprisingly, they represent half of the spend in the economy is low-income consumers. So if we see that growing and at least as much as middle and higher income, that's a good sign. July, we saw it growing at a higher pace across most categories, and in particular, general merchandise and sporting goods. So that's a very good sign for a healthy economy.
How did consumer behavior change post-pandemic, and what are some of the factors that you think attributed to that?
So pandemic changed, obviously, the way we work, the way we live, the way we spend. But interestingly, if you look at the behavior of consumers pre-pandemic, and everyone said, oh, everyone's going to be spending more online, there were a lot of structural changes that occurred during the pandemic, supply chain issues, people locked up at home. But what's interesting is after all those structural challenges went away, people snapped back and went back to stores. People like to be in stores. It's still the lion's share of consumer spend is in store. So before pandemic, 2019, 30% of spending was online. It spiked up maybe to mid-30s or higher during the pandemic. It was 25% pre-pandemic. Now it's 30% 3 years later after the first COVID spike. So you would have expected that anyway, as if the pandemic never happened. We're seeing the behavior bounce back to what we thought it would have been had we not had a pandemic.
Consumers like experiences, right? That's why the omni-channel approach is what retailers have to be doing at this point. Yes. Based on the trends that you've shared, what are some of your predictions for the back half of the year?
So we are very bullish for the second half of the year. So hopefully that makes everyone who's watching smile. And here's why. So there's $500 billion left of savings from the pandemic, believe it or not.
I'm surprised there's even that much. I mean, we're not typically known in this country for saving. I mean, we saw that pre-pandemic. I'm surprised there's that much.
It's surprising. I mean, there were $2 trillion that was put aside during the pandemic as a result of the stimulus checks, deferred spending. So $1.5 billion is gone. $1.5 trillion is gone, right. But there's $500 billion left, which is a backstop to the economy. And if you look at low income, we are predicting that they'll still outpace or at least not lag middle to higher income. One of the things that we look at as to how long that $500 billion will last is the mix of inflation, which we'd like to see at 2.5% to 3%. Fed is targeting 2%. We'd like to see wage growth at 5 to 6%, which is roughly what it is now. And we'd like to see interest rates, in line. If those things happen, that $500 billion could extend well into next year. So we're bullish there. And it's also important to note, we don't live in a homogeneous economy. You really need to go deeper and look at income levels. You need to look at age, even political affiliation, marital status. And because our data, Affinity's data, comes from all those 140 million cards and $1.5 billion a day of spending, we're uniquely able to dive deeper and see those trends happening in near real time.
It would be interesting to see how this plays out through the election cycle. We know it's going to be aggressive, so I'd be curious to see what Affinity Solutions, when you pick up, based on political affiliation. I didn't realize that was part of the mix as well.
Yeah, and we're happy to report on how Democrats versus Republicans versus independents spend. That could be another follow-up.
It certainly will be, Jonathan. Appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.